I want to ask you about what's going on in the UK, and I'm going to pull up a chart for us here, Lucy, which talks about the UK stock market and the way it has performed relative to others. 7522 in the Bloomberg Library, and you can see here on the bottom panel the FTSE 100 outperforming MSCI Europe, excluding United Kingdom. There's a few things going on here, of course. There's currency, there's also a weighting towards energy. Yeah. So I wonder how interesting UK assets are to you with those things in mind.
Well, there's still some value there, I think, in a relative sense. And so if you're looking at overvalued markets everywhere, or fully valued, where can you actually see some absolute value? You can still see some in the UK. However, we have Brexit and we have political risk, which is associated but not completely dependent on Brexit. So I think there are reasons why UK assets should be cheaper. However, there are some stocks in there which are probably more insulated if they're overseas earners, and the energy companies are running on their own international path.
On the Brexit story, are there some companies that you hold that you are concerned about what happens with Brexit? And do you sort of model what could happen with a hard Brexit or a soft Brexit? Or have you managed to stay away from companies that you think are going to be all that affected by what is finally decided?
Well, in global terms, it really is not a huge deal because the UK is a relatively small part of the overall. It's about 8% of overall and not increasing. So in global terms, it's not the most important thing that's happening. You don't need to have risk there in a global portfolio. I think if you're running a European or a UK portfolio, it's very different.
In terms of the global story then, of course, we're in earnings season. We get to kind of ramp up into the midst of it, I suppose, but we've had a few clues as to how the earnings season is going. It's interesting, I was talking to one of our colleagues recently who was suggesting that, trade is going to be, and fears about a trade war, it's going to be, that's the top concern for executives. And there's some research, I think it was a Barclays piece recently, suggesting that is a big concern for corporates, for executives around the world. But at the same time, that's not necessarily being reflected in the numbers just yet, is it? The numbers are a bit backward looking. The outlook statements are reflecting something a little different. How are you seeing that develop as we go through this earnings season?
That's actually a very good overall summary. So far, we've seen good top-line growth. We've seen solid margins. We've seen some impact from currency. And that is now beginning to shift a little bit more in favour of Europe, relative to the US because of the strength of the dollar. But what we're really interested in is watching and seeing what they say in their outlook statements about trade frictions, and what they're doing about it in their own businesses. Because this is another obstacle for companies who've got a lot to deal with already. And what are they doing? Are they shifting production? Are they watching to see? And what is their view about how far the whole war could go, or whether it is a more political